Hello, my dear students. I welcome you all in the world of accountancy. Today, I am going to discuss a new chapter of accountancy, books of original entry, journal. So, shall we start? The books in which a transaction is recorded for the first time from a source document are called books of original entry. The books in which transaction is purchased goods, sold goods, paid rent and so on. For the first time from a source document is any bill, any voucher or any other proof of the transaction are called books of original entry. Journal is one of the basic books of original entry in which transactions are originally recorded in chronological order. Chronological order means date-wise on the basis of time. Now, what do you mean by journal? Journal is a book of original entry in which the transactions are recorded first of all as and when they take place. Now, the performer of journal. First column, date. In this column, date of transaction is entered. Second column, particulars. In this, transactions are recorded. As each transaction affects at least two accounts, the name of the account to be debited is written first and the word debit is also written at the end of the column. Just take an example. Purchases account debit to cash account. Purchases account and the word debit is also written at the end of the column. The credit account starts with the word to make it distinct from the debit account. Means to cash account. Next column, LF. LF stands for ledger folio. It is the page number of the ledger account where the posting has been made from the journal. This page number of the ledger is recorded in the journal. Now, the question arises in your mind that what is ledger? Ledger is the next book which we prepared after journal. In this, classification of accounts are there just like purchases account, sales account, rent account and so on. Next column, amount debit, amount credit. In this, the amount of the account being debited or credited is written. Now, we will see the effect of transactions in journal entry. Started business with cash. As every transaction affects at least two accounts. So, here cash and capital are affected. Cash is coming in the business in the form of capital and according to the real account, cash is coming in the business, so debit what comes in. Here is the journal entry. Cash account debit to capital account. Next, purchased goods for cash. Means we have purchased goods, means goods are coming in For cash, cash is going out. Two accounts affected are purchases and cash. And the entry will be purchases account debit to cash account. Now, the next entry. Purchased goods from Mohan. Now, in this entry, we have purchased goods. Means goods are coming in. But we have not paid cash. We have purchased goods on credit from Mohan. Hence, creditors increased. So, the entry will be purchases account debit to Mohan. Sold goods for cash. Sold goods for cash means goods are going out from the business and cash is coming in the business. So debit what comes in, credit what goes out. Entry becomes cash account debit to sales account. Next entry, sold goods to Rohan. Goods are going out, but debtors increased. So the entry will be Rohan debit to sales account. Next, purchased furniture for cash. Furniture is coming in the business, cash is going out from the business. So entry will be furniture account debit to cash account. Next, sold furniture for cash. Now, furniture is going out, cash is coming in. So the entry will be cash account debit to furniture account. Paid rent rupees 10,000. We have paid rent in the form of cash. So rent is an expense, debit all the expenses. So entry will be rent account debit to cash account. Received salary. Salary is also received in the form of cash. So cash in the form of salary. So entry will be cash account debit to salary account. Goods returned to Mohan. Goods returned to Mohan means we have purchased goods from Mohan and due to any defect or any problem we have returned goods to Mohan. Means purchase return and Mohan is there. So the entry will be Mohan debit to purchase return account because Mohan is the receiver of the goods. Now debit the receiver. Next, goods returned by Mohan means Mohan returned goods to us. Means we have sold goods to Mohan and due to any problem Mohan returned goods to us. So sales return is there. Now Mohan is the giver of the goods. That is why sales return account debit to Mohan. Thank you. Hope the concept is clear to you.